Hello everyone, this is Investing with Envy and welcome back to another video. Recently, Bitcoin mining companies and other cryptocurrencies have seen a slight pullback, but what does this mean for you and I? Does this mean that this is the end of the bull run for Bitcoin and other cryptocurrencies? Or could it be that Bitcoin is just taking a little bit of a break before it skyrockets? Bitcoin, along with other cryptocurrencies, have seen a lot of volatility lately, and for the most part it's been upside volatility, so it shouldn't be to nobody's surprise that it's taken a little bit of a break right now because it's been on a sprint going up. With a lot of institutional interest coming in right now, everyone is extremely bullish on Bitcoin, but why are we seeing this pullback at this time? Obviously, we've seen a good run since the summer of 2021, and one of the reasons for the pullback is people taking in profits and reducing their risk on the downside. Another reason for the pullback right now is due to options contracts, and November 19th is an expiration date for a lot of options right now, so you're seeing a lot of people selling and providing additional supply in the market. I believe that after November 19th, we should see a lot of institutional investors coming in and we should see the bull run continue. Bitcoin is set to have record highs by the end of 2021, and people like Raoul Pal and famous Bitcoin analyst Plan B have been on record saying that this bull run should continue to at least the first quarter of 2022. Analyst Plan B has even been on record saying that we should see the Bitcoin price being at 98,000 by the end of November and 135,000 by the end of December. This is truly remarkable because Bitcoin would have to more than double its price right now in just a little bit over a month. I do think it would be hard for Bitcoin to reach 98,000 by the end of November because it would have to gain about $40,000 in just about 10 days. So what is the reason for such high convictions in the price of Bitcoin over the next coming months? The reason is that Bitcoin is seeing a lot of institutional investors coming in the markets right now, and there will be billions of dollars coming in, which should force the price of Bitcoin to go much higher than it is right now. Another big reason why people are so bullish on the price of Bitcoin right now is that there is so little supply out there in the exchanges, and people, companies, and Bitcoin mining companies are just not selling Bitcoin right now. So this is going to create a supply shock to the market. This means that the people who are holding Bitcoin right now are planning to be long-term holders, and with a lot of institutional interest coming in, and with about only 10% of the entire Bitcoin market being on exchanges right now, we should see the supply shock and the price of Bitcoin exploding. On a recent podcast with Anthony Pompliano, he had Dylan LeClair on the show, who is a young wizard into studying the Bitcoin metrics on the blockchain, and he goes on to explain what he sees going on in Bitcoin right now.
All right, let's start off with why the hell is the Bitcoin price going down? Before we get into any of the charts, Bitcoin was at 66, then 69,000. Now it's dropped. Last night, everyone thought the world was ending. Literally, Armageddon is coming. We're dropped below 60,000. What the hell is going on? Why is that happening?
Yeah, a lot of this stuff, when you're thinking about Bitcoin, the Bitcoin market, a lot of this stuff on the shorter time frame is just driven by the leverage dynamics, a lot of the derivative stuff. So even, the most bullish kind of macro environment, we all kind of, know what's happening with inflation right now. The thesis of digital gold, of something that's absolutely scarce, has never been stronger. But in the shorter time frames, you kind of get dislocations where people get a little too greedy, and Bitcoin takes the way of math's pain. So you're gonna see those over leveraged traders. You're gonna see them all get wiped out, and you're kind of seeing that. You saw that a little bit last night, this morning, and it's completely natural, right? It's the volatility is the price you pay for returns, and anybody that's over levered is going to get wiped out along the way.
Dylan sees that there is some leverage in the markets right now, and those who are over leveraged will definitely get wiped out. People start using more and more leverage as the prices go up because of fear of missing out, and they tend to over leverage themselves in order to get maximum profits. Most of these people will get wiped out even with small pullbacks, just because of the high amounts of leverage that they use. He also said that the derivatives market is a lot different than how it was back in April and June when the market crashed, because there is a lot less leveraged accounts right now compared to April and June. This makes it unlikely of any massive pullback to occur because there's a lot less leveraged accounts and a lot less people that will be forced to sell in any sort of correction. People start using more and more leverage the more prices go up because of fear of missing out and trying to maximize their profits. But what happens is they often get wiped out even with a small pullback just from using so much leverage. Dylan also explains how the derivatives market right now is a lot different than what we saw in April and May because there's a lot less people using leverage right now. So the chances of us having a massive pullback is pretty low because there's less people who will be forced to sell their stocks in a downturn. However, as the Bitcoin price goes up, you will see more and more people start using more leverage and put themselves in the same bad situations that they were in April and May, and you can guarantee that the cycle will repeat itself at some point.
All right, now you've got this thing titled Driving Catalyst for Bitcoin Bull Run. And when I was looking at it, you've got the real 10-year Treasury bond yield versus the 10-year TIPS yield. And this is not on-chain metrics like we would think about it. This is more kind of macro analysis. So what are you looking at here?
Yeah, so I'm really just looking at basically the 10-year yield, the real yield, and this is even if you're thinking about CPI being true, which I think we both could kind of agree that it's not the most accurate metric in terms of stating that the actual inflation rate. I think it's personally a lot higher, but essentially the reason I'm so confident in the kind of the Bitcoin thesis, long term, even medium term, really bullish on Bitcoin, regardless of the leverage dynamics over the next day or week or even month, is because essentially you have the entire world, the entire global, all global assets are based off basically the U.S. Treasury market, and the Treasury market's $30 trillion alone. But when you have real yields, basically the cost of capital is negative. Every single asset on the planet is distorted, and a lot of really smart macro guys that I trust and respect and I agree with them, are basically saying that real yields can't even go positive or else the entire financial system collapses. The Fed has to continue to print money and inflation has to continue to run higher than interest rates. And so, in that environment, you have just the bond market alone is, on the low side, 100 or maybe a couple $100 trillion of capital that is guaranteed to lose money. And so, basically with Bitcoin at $1 trillion, 1.2 trillion or whatever it is, that's still super small and just a tiny amount of outflow from these bond markets where all of these contract holders are guaranteed to lose money into this global monetary asset that nobody can create more of, is supply inelastic. We've the whole 9 yards. The price of Bitcoin will have to really go a lot higher for it just to absorb even 5% of this market.
Dylan also mentions inflation and how the government is printing more and more money and how it's becoming harder to choose investments that will continue to beat inflation. He talks about the CPI inflation and how this metric is a bad representation for what the real inflation is right now because it doesn't include a lot of things that have gone up much higher than the average inflation. If houses and cars and many other items were included on the list that the CPI tracks, you would see inflation going from about 6% and you would see it go to about 10 to 15%, which is huge. Bitcoin is known as an inflation hedge and it should keep up with inflation and beat inflation by a long shot. And with bonds right now having negative real rates, owning bonds right now is a loser's game. The treasury market right now is about $100 trillion. And if people who are invested in bonds right now are losing money because the interest earned cannot keep up with inflation, we may see some of that money being allocated into Bitcoin. Bitcoin is still very small compared to the treasury market right now, so even a small percentage being allocated into Bitcoin will have a huge upside on the price. Some people say that once the economy gets back to normal, you should see interest rates go up higher and we should see positive real yields on bonds. But the government is in so much debt right now that even if it were to raise the interest rates, it would default on all their debt. So they must keep printing more and more money, and you will not see positive real yields on bonds anytime soon.
But so my question's around price, right? So all these charts are super helpful. It gives us a good overview of everything. But I think a lot of people, at least in the chat, are asking questions about price prediction, right? So Plan B has at the end of this month, I think his low was 98,000. And we're obviously getting towards now, we're halfway over with the month and stuff. Everything you're looking at, do we have a shot at getting there?
I mean, I would say we don't have a shot. I mean, I think it'd be an upwards battle in the sense that we'd really have to have some major catalyst, but I wouldn't rule it out. You know, some sort of announcement, especially like, you know, what happened with Tesla, say earlier in the year, where it really kind of changes the attitude in the legacy markets, whether that's some big player announcing in quarterly earnings or something like that. Or even, you know, no announcements. It doesn't really matter. You know, just the broad kind of accumulation in the macro backdrop. If some big player is looking to secure an allocation, price could really get bid up there. But you know, the leverage would have to, you know, stay away a little bit, and we'd have to, you know, or just, you know, not let that kind of cascade us down away from that 90K spot. It would be tough. I think the options market's implying only like a 1% chance of that happening. I would say it's a little higher than that, but you know, looking at in the middle of the month here at 60K, it might be an upwards battle.
Reaching the price target of $98,000 by the end of November that analyst Plan B had predicted is a long shot. For Bitcoin to reach this price by the end of November, something extraordinary would have to happen because it would have to cover about $40,000 in such a short period of time.
All the metrics that you're looking at seem to be that we're still in a bull market. The price has appreciated a lot when you look back 365 days ago to today. Obviously, we had that mini bear run during the summer. But going forward, what metrics are you looking at that are going to be key drivers, like to when the bull market's ending, how high the price can go? What metrics are you looking at there?
Yeah, it would basically be kind of both on-chain and derivatives markets kind of screaming some of these bearish signs. So when we're looking at like the accumulation metrics, like coin days destroyed or you know, MVRV, market value to realized value, if these things are really spiking, showing kind of, you know, we're overheated and on-chain perspective, we've kind of prices ran up a bunch. You have old holders cashing out at the same time where you know, everybody is euphoric and thinking this time is different and leveraged up. You know, going long still, you know, if price is at 150 or 200 or whatever insane, you know, multiple we're at some sort of market top, that would be a sign for me to say, hey, well, maybe we pull back a little bit here. And you know, as a Bitcoiner, as someone that has this decade-long thesis, that's not a sign for me to sell. That's a sign for me, you know, to maybe reduce a little bit of leverage, stack some cash, and you know, be happy to buy the dip a few months or maybe a year later. So you know, regardless of the price action, you know, my conviction and my thesis for what's unfolding here, it doesn't really change. It's just, you know, taking advantage of securing the largest allocation I can with this data.
Great thinking process.
Dylan, when we look at the next 6 weeks, there's a bunch of people who say, hey, Q4, that's when bull runs end. We saw that happen in 2017. Is your thought process that the bull run ends in Q4, or do we push into 2022 and kind of see a continuation of the bull run in the new year? Like, how do you think about timeline?
Yeah, I mean, obviously, like, you know, we're going to have to see in terms of the activity and the metrics and the on-chain data and the derivatives, but I'm not in the camp that I think this thing just putters out in 6 weeks and then we go home. We see another 70% drawdown. I don't think that at all. I think in terms of adoption, we've kind of hit this threshold, the secular level of adoption at a nation state level, at an individual level, at a corporate level, institutional level. Bitcoin is much more accepted. In 2017, price had run up from $250 to $20K in what, 2 years. And so, we were very, very overheated, and I don't think we're really at that level at all. We're still, flirting with, the 64K all-time highs we hit earlier. The on-chain metrics are not overheated. And so, the longer we chop, the longer we consolidate, people may be getting, antsy, but that's actually really bullish. The longer we chop, the more this kind of sprint compresses and the farther we have to run, in my opinion. So I think, a bull market into 2022 is honestly my base case at this point.
Dylan also mentioned what he's looking at when he's trying to see when the market is either oversold or overbought. And mostly he's looking into the blockchain metrics and the derivatives market to determine whether the market is oversold or overbought. Because of these metrics, he doesn't see the bull run ending in about 6 weeks. He does see it continuing on to 2022 because right now Bitcoin is more widely accepted than it was back in 2017. So this means that you should see longer bull runs and the pullback should be shorter because people will continue to buy the dips, which creates more liquidity in the markets. So there you have it, guys. The reason for this recent pullback is due to some people taking in profits in the November 19th options expiration date, which is creating some additional supply in the markets right now. But I feel like this will be very short-lived and we should see the bull run continue. I hope you enjoyed the video about what's going on in Bitcoin right now and what we can see in store for the future. If you did enjoy the video, please click the like and subscribe if you haven't yet done so, and hit the notification bell so you don't miss another video. I feel like this next rally that we will see with Bitcoin and other cryptocurrencies will be huge and it will be life-changing for a lot of people, and I am extremely excited for what's going to happen in the next coming months. Again, this is Investing with Envy, and I will see you on the next video.